Hi guys, it's good to have you here once again. So today I'm going to show you how to avoid losses during US stock market crash. You know, it's a common thing that people fear to lose money. We all want to make money, right? So we don't really have interest in losing money in the financial markets. And that's the truth. We're all about making money and losing less or not losing at all if possible. So in today's video, I'm going to show you how to protect your money from losses during market crash. Like this, you can see this massive crash now, right? Now, before I start, let me address something. There's a general belief that when you buy a stock, just keep it. That as long as you don't sell, even if it drop, if it crash, it will still have to back again and you make a profit in the future. Guys, that is not true and that is not so. All you just have to do is to google.com bubble crash that happened in early 2000s. When you do that, you will see that that is a complete lie. A lot of companies went under and never came up again. Their stocks became dust. To date, they are gone forever. So don't believe that trash that once you buy a stock, just keep it there and they just keep going up, going up. If it's crash, one day it go back again and then you will end up making your money. That is not true at all. That is only true within a contest, which I'm going to share with you in my upcoming videos on which stocks to buy and to invest for a long time to make your profit. So right now, let me show you the secret of how to protect your funds from market crash. So let's start. Now, let me start by saying that the first mistake a lot of investors make in the US stock market is that they don't know when they should be investing in the market and when they should be taking profit. You see, the stock market can be time. It has time and seasons. So there's what we call seasonal tendencies. There are times of the year that the stock market give a nice entry. It give you a chance to enter into it at a very cheaper price before it values up. And then after that, it drops. It peak and then drop. So basically, the market works in cycles every year. And I can show you right there on my chart. Go to um let me start with this INTC stock, Intel Corporation stock. Let's mark it year by year. Let me show you. You can see what I'm saying. This is last 23 to December of it. Look at the movement from this low, January to December. It was it went up, and then from January early this year, it started going down. Do you see that? Right now, you see this actually repeats itself every year, every year. Let me show you again that movement. Um, this was January 16, 2016 to December 2016. It went up. They retraced back the following year, right? And then notice that there's a common thing here. Every January, most time market values. Then every June. it values up again. You can see this happened in June, it make a low. From July upward, it went up to another June the following year. You will see. So there are times of the year that the market gives us a good opportunity to enter the market. And let me even show you on Apple too. This does not only apply to Intel, it applies to major stocks. This is Apple. You can see already marked it out before. So you can see right there. Um, Last year January to December movement went up. Around June and August it dropped a little bit. Then October it was the last rally to the year. You can see. So there are times of the year that we expect market to move, and then we also expect that market to drop in value. So you know where to take profit and take your money out of the market, at least majority of your funds out of the market. You see, so market is actually timed, and you can see now December, right? In December of this year began to drop, and drop. And in January last year, it went up. Now, how do you know when to exit the market? Actually, every December, you should be taking profit from the stock market. So usually the last value of the year happen from October to December. Once December, you should be taking profit. It should drop. Now by January, it should give another entry to enter for a buy again. And then from there, by March, you should also take profits because it will drop in March, and then April, give another entry again, and then from April it will run up to June, and then from June again it will drop, and then from October, that's the life cycle of the year. That is how this market is booked to move. Maybe I show you on a much more clear time frame for you to see. Now look at all this move going down from January to winter to July. From July, it dropped again till October. So October, it gave us the last rally for the year to December. And then from December last year begins to drop. You can see right there. So this is quite um common stuff you see with stock market. Now, how do you protect your funds? If you want to have a precise uh fund management, then you have to start using what we call stop loss. How do you do that? You first have to identify the trend you are in, if it is uptrend or downtrend. For example, now, let's say you entered in October around this low around here last year. So as price begins to move, you have a point that once price drop below that level, you exit the market or your funds. So it creates a swing low here, went up again. This is the last point where the bought from, right? So what do you do? This place, we have your stop loss, this price level. That means $188.84 per share of Apple. So once market went up like this, December, you took some profit, and then once it dropped below this place, the next day you came online and said, "Okay, it has dropped below this place," should sell off all your shares on Apple, like at least let's say 90% of it. When you do that, all these old downward a crash will not affect you. That way, you have funds to buy at a very cheaper price when it's about to go up for the next rally again. So it's quite a simple and straightforward something. Are this clear? Let me show you an example again. An example. So last year January movement began from here, and it's, let's say you put on this low, right? As price begins to move, you move your stop loss below swing lows. This is the last low that was formed. So your focus will be that once price closed below this price level, the following day you came online and say this, just sell off your stock. So it will trace, then went up, kept going. As price kept going higher, you also have to shift high your exit point below recent lows. Now this whole move happen in weeks. So you don't have to be active checking your stock. No, no, no. You can always do this maybe once every weekend, you know, or once in 2 weeks. So but I will actually recommend that you try it once every weekend, check on your investment. Depending on how busy you are, you can do once in 2 weeks, once in every weekend, or once in a month. So here, as price began to go higher, you begin to trail your stop loss in your mind. Mark it that once price closed below this price level, you will sell. It went up again, it did not close below it as well. So as price began to increases, so and then onto this level, it went up. Then when price closed below this low right there, below this 0.8, 0.38 dollars, right here on this day, sell off. So what does that mean? It means that from here, you join the move from here, from this low, and then to this high. You've made 46% profit. If you take profit at this top, that is 50% profit. Passive income, right? That is just from January to July and then August. So that is just 7 months. In 7 months, you make 50% profit of return on your investment on this stock last. So this is quite easy, guys. So and when it happen, you take out your funds when that low was broken, and then market crashed massively. You can see it gave a drop, a retracement again, very well, nicely movement. And now you save your funds from experiencing all this or sell, panic sell until the right time again, which is here, October. Now, in the next video, I'm going to show you the best month of the year to invest in stock markets, because believe me, guys, not all month you should be buying stocks for investment or for profit, whatever it is. There are times of the year that stock market rallies up. So I'm going to show you those months in the next video. I hope you find this very insightful. If it helps you, give this video a thumb up, big like, drop your comments, and anything you want me to cover in the next video, please drop the comment on it. And if you need help in knowing which stocks you should be buying, when you should be buying and selling them, take profit, you want me to guide you on those things, then send me a DM. Um, I do that for people a lot, so I can guide you. But of course, it's not free. But send me a DM and we can talk on this, and then we're going to arrive at what will work best for you, how to manage your portfolio, when you should be buying, when you should be selling, depending on your capital size. So thank you, guys. Lastly, Make sure you share this video with your friends. Thank you. I love you. See you next